Yo, what's the dealio, man? Listen, you already know I have a straight banger for you. All right? So, in this video, what I want to talk about is a hidden place where people are always losing money on the charts. All right? When you're trading, when you're getting into a trade, there is a place where a lot of times people lose money. And this is one of my cardinal rules, okay? So what we're gonna do is we're gonna break it down. Now, if you guys are just tuning in, be sure to like this video for me, subscribe to the YouTube channel, and also nothing in this video is financial advice. I'm just sharing what I know and understand about the stock market and what's working for me. All right, so we got that out the way. Now, let me bring your attention to this photo right here. So we got this photo right here, right? This is a chart of Nvidia today, right? The market popped up, came back down, looked like we was about to sell off. Market woke up and then we blasted off, right? But right here, I want you to look at these skinny little lines, okay? If you don't know, we call those wicks, all right? Or shadows. Some people say shadows, some people say wicks. What this represents is a place on the charts where the stock went to. But on that time frame, the buyers or sellers were not fully able to stay in that area, okay? So this currently is a 30-minute time frame. What we're gonna do is we're gonna go between a 30-minute and a 15-minute time frame, and I'm gonna show you guys something, all right? So my rule, I always say this. If you guys are in the Prosperity Collective and we be trading, you be hearing us say, hey, I always wait for what? A candle closure. Why is that? This is how you get cooked in the market. All right. So before I show you and illustrate this to you, I need to break this down for you so you can fully understand. So when we go to the charts, you know exactly what I'm talking about, right? So a lot of times when we see a stock going in a direction, we don't even think, we just get in, right? We don't know what time frame we're getting into. So you can see it going up, and then it's going up. You get in the trade. You don't know which time frame you're entering on. Mistake number one. You need to know which time frame you're entering on. Okay? Just because the stock is going up does not mean you get in the trade. That's not what it means. Okay? We need to know what levels it's going to, where it just came from, right? Where was it testing at? How close to support was it? How close to resistance was it? Is there an order block? All of these things. And I'm not trying to overcomplicate this. I'm actually trying to simplify it for you. All right? So just because you see a stock going up, don't mean get in. Now that we have that understood, I want you guys to understand, do not enter into a trade, a scalp trade and or like a day trade, unless the candle closes on your preferred time frame. Please understand what I'm saying. All right? Do not enter into a trade until a candle has closed. Let me break it down why. Because if you enter in, and let's say the candle has 4 minutes left and it's going up, most likely what's going to happen is, right, if this trend is not super strong, what's going to happen is you're going to enter in, most likely at the top of that candle, but you don't know it's the top of the candle yet. And then the last minute and a half of the candle, it's going to start dropping, okay? It's going to start dropping. And you like, dang, and you don't know why. But the reason why is because on a shorter time frame, on a smaller time frame, it's actually beginning to reverse. And this is how you become a wick, and this is how you get cooked in the market. All right? So let's now go to the charts, and I'm going to illustrate this for you. All right? Watch this. Okay? All right, so we got the charts right here, right? Let me pull this up. All right, so these are the charts right here. All right. So let's go to, I have NVIDIA pulled up on the 15-minute and on the 30-minute time frame so that you guys can see the difference between the two. All right. I want you guys to be able to see the fake outs happening. Right. So this is the 30-minute. Right. Look at this wick right here. All right. So right here, we have a wick here, right? Boom. And we also have a wick right here. So if you enter in off the 30-minute time frame and you just see a big green candle and you take entry, you didn't see that on the 15-minute time frame, it came up and it reversed on the 15. So on the 30-minute time frame, what you're seeing is a big green candle up here. On the 15-minute time frame, you see a closure right there. It came up and then it came down. Right? This is how people get tricked out. So then on the 15-minute time frame, the stock comes down, you get scared out, and then look what happened. Boom. But if you would have just waited on the 30-minute candle closure, you would have never entered in on here, or you would have entered in at the beginning of this candle, or when it broke right here, rode it up there. Once you saw it was reversing, you probably would have got out and you would have been profitable in that trade if it was a scalp trade. Right? So really understand what I'm saying. Perfect example. This is the 30-minute time frame on the top one. On the bottom is the 30-minute time frame. On the bottom is the 15-minute time frame, right? Look at this wick right here. And the market is open right now. So this is great to show. The market is open right now, right? So on the 15-minute time frame, this came down and now it's pushing up. But on the 30-minute time frame, it's still a bullish bar right here, right? So we don't really know what's going to happen until we see what the 30-minute candle closes like. So if I want to take this trade right here, number one, I'm going to look at my levels, right? We're at all-time highs already. Okay. We're at all-time highs. Okay. So what I'm going to do is I'm going to wait until you see how it's wicking right now. You see, this is exactly what I'm talking about. On the 15-minute time frame is dropping. If you would have got in right here, right? Look what would have happened. It would have pulled back because in each candle, you have a battle between the buyers and the sellers. So you don't want to take an entry in the middle of a war, right? Ask yourself, if I'm looking at a war right now and I see two opposing teams, countries, whatever, do I want to go in the middle of that war? If I see a football game and it's an intense game, do I want to walk on the field in the middle of the field while the game is going on? No. Why not? Because you don't know what's going on. What are you going to do? If you're going to cross the field, you're going to what? Wait until the game stops or wait until there's a timeout or something, right? That's the same as a candle closure. If you see a basketball game playing, are you going to just walk through the court while the game is going on and they got a fast break? No, because you're probably going to get hit. Somebody going to run over you, something like that. So never enter in a trade in the middle of it happening. If you're in a trade, the point of you being in a trade is seeing, are the buyers in control or are the sellers in control? Right? So if on the 30-minute, you're like, ooh, I'm going to get in because it's going up. No, the time for you to be in this trade was once it opened and it started to go in the direction of your trade based on your setup. Because now, this being a consolidation candle right here, this right here is burning your premiums. It's burning your premiums, right? So you want to make sure you wait for the candle to close on the respected time frame that you're trading on, and from there manage your trade by reading the candlesticks that are being presented to you, right? If you're trading on the 30-minute time frame, do not enter in a trade immediately once the new candle opens, because look, on the 30-minute time frame right here, right? Let's go to just one chart. All right. 30-minute time frame. Let's say I wanted to get into calls, right? Once this candle opened up. Wait for a minute, because look what happened. It came down first. It came down to 193.30, right? 193.30. And it bounced off the 9 EMA. But look where it opened at. 193.90. Right here. So, would you rather enter in a trade at 193.30 or 193.90? The obvious answer is the cheapest place. So the goal is to enter in at the cheapest place. If you're anticipating a stock going to the upside and a candle opens up on the 30-minute, drop down to the 15 real quick and see if it's going to come down. And if you see it start pushing up on a smaller time frame, then we could go back to your regular time frame and you could take the entry at your desired place of entry. Right? But do not take an entry at the end of a candlestick, because what's going to happen is this right here. Because you don't know who's going to win the war between buyers and sellers until the end of a candlestick. Right? Have you ever been in a trade and it looked like it was going up? You in a car, it looked like it going up, and in the last 30 seconds of the candle, it drops and it gives out? That is because buyers got defeated on that candlestick. Right? So really, really think about this stuff. These wicks make people get cooked in the market. And it is because people are entering while the war is happening, while the battle is happening, they're entering. And then they get ran over, shot, stabbed, beat up. Right? You want to cross the court. Remember what I'm telling you. Cross the court, cross the battlefield after a pause has happened. That is the most calm way to take an entry in a trade. Right? Because as you can see right now, it's fluctuating. It's still coming down, and we have 5 minutes left on this candlestick right here. So this candlestick could close right here. Right? So please, please, please understand that. A lot of people are not considering these wicks right here. And the bigger the wick, the bigger the pressure from that side, buyers or sellers. So this is a lot of selling pressure, and that's why it came down. This is a lot of selling pressure. That's why it's coming down. And if it pushes lower, it could come lower, right? A lot of selling pressure right here. Because we're at all-time highs, and this was also resistance, right? The high of day is facing some resistance, so it could start coming down, right? So you got to be able to know, okay, I'm about to enter in on a 30-minute time frame. Let me wait until that candle closes, and then let me see what the 15 does for a minute, right? Does it come down a little bit? Let me let it come down first. Let me let it bounce and then start going to the upside or to the downside, whatever direction you're taking that trade in. But do not become a wick because you see momentum and you just like, I'm going to just take it. Right? This is extremely important if you want to make money in the stock market consistently, or any market, if you're trading in general. All right? Do not become a wick. Please wait until the candle closes. All right. Wait until the candle closes on your respected time frame. And that is when you want to take an entry, right? So here's my rule. I will enter in a trade after about 2 minutes of that candle opening up, right? So if I'm on a 30-minute time frame and it's only been about a couple minutes, I'll take entry. As long as it's going in my direction, because we're still at the beginning of the session. We're at the beginning of the battle. So it's not crazy yet. It's not hectic yet. And as long as it's my setup, I'm okay with that, right? But what I won't do is if we're on a 30-minute time frame and it's 17 minutes in, I'm not entering in. I'm going to just have to wait. I'm going to have to wait. The only way I'll do that is if I see a setup on the 5 or the 15 minute that supports my direction on a larger time frame. What do I always say? Bigger the time frame gives you direction. The smaller time frames give you precision. So if you see we're bullish on the hourly and we're coming down right now, but then you see a reversal on the 15-minute time frame, then we're probably going to be going to the upside, because that reversal, always remember, a reversal always happens on a smaller time frame before it happens or it's shown on a larger time frame. And this is why the smaller time frames will give you precision, but you still need to know the direction based on the bigger time frames, the daily, the 6 hour, the 4 hour, the weekly. All right. So I hope that this video helped you, and I hope it made sense. All right. If it did, let me know in the comments, right? Let me know in the comments what made sense and what hit for you. All right. Like I always say, make sure you get up out your head, go get into this world, because your head is a dangerous place to live. All right. And also remember, y'all, the more you study, the less you worry. All right. I appreciate y'all time. All y'all stay smooth. I'm going to holler at you guys later on tonight's live and also on tomorrow's video. All right. Peace.